Oregon Real Estate Final Study Guide Questions and Answers.
Question 1. How much notice must the agency provide before conducting a compliance inspection? Option A, 24 hours. Option B, 3 days. Option C, 5 days. Option D, 10 days.
The correct answer is option C, 5 days. The Oregon Real Estate Agency generally must provide at least 5 days advance notice before conducting a routine compliance review of a brokerage.
Question 2. For how long can a real estate broker's license remain expired before it is no longer renewable? Option A, 6 months. Option B, 1 year. Option C, 2 years. Option D, 5 years.
The correct answer is option B, 1 year. If a license remains expired for more than 1 year, it lapses completely, and the individual must restart the licensing process, including education and testing.
Question 3. Who is prohibited from being an authorized signer on a property management trust account? Option A, the property owner. Option B, the principal broker. Option C, an associated real estate broker. Option D, a licensed property manager.
The correct answer is option A, the property owner. To prevent commingling and maintain fiduciary control, the property owner cannot be a signer on the property manager's client trust account.
Question 4. What are the 3 essential items needed to open a client trust account? Option A, the account opening date. Option B, the account number. Option C, written authorization for the real estate commissioner to audit the account. Option D, the broker's social security number. Option E, the client's routing number.
The correct answers are options A and B and C, the account opening date, the account number, written authorization for the real estate commissioner to audit the account. Oregon requires brokers to notify the agency with the account number, opening date, and explicit permission allowing the commissioner to audit the trust funds.
Question 5. Which entity is known for purchasing home loans and turning them into mortgage-backed securities? Option A, Ginnie Mae. Option B, Fannie Mae, Federal National Mortgage Association. Option C, Freddie Mac. Option D, the Federal Reserve.
The correct answer is option B, Fannie Mae, Federal National Mortgage Association. Fannie Mae operates in the secondary mortgage market, buying conventional loans from primary lenders and packaging them into mortgage-backed securities.
Question 6. What are the 4 key factors of property valuation? Option A, demand, utility, scarcity, transferability. Option B, location, condition, size, age. Option C, income, expenses, cap rate, value. Option D, cost, replacement, depreciation, land.
The correct answer is option A, demand, utility, scarcity, transferability. The acronym DUST represents the 4 essential elements of value, demand, utility, scarcity, and transferability.
Question 7. How many components are included in a reconciliation of a client trust account? Option A, 2. Option B, 3. Option C, 4. Option D, 5.
The correct answer is option B, 3. Reconciliation involves 3 components: the bank statement balance, the check register, receipts and disbursements, balance, and the individual client ledger balances.
Question 8. If a real estate broker receives over a certain amount of cash in one transaction, they must report it to the IRS using Form 8300. What is that amount? Option A, $5,000. Option B, $8,000. Option C, $10,000. Option D, $15,000.
The correct answer is option C, $10,000. Federal law requires any business, including real estate brokerages, receiving more than $10,000 in cash in a single transaction, or related transactions, to report it on IRS Form 8300 to combat money laundering.
Question 9. How does the Fair Housing Act of 1968 differ from the Civil Rights Act of 1964? Option A. The Fair Housing Act only protects against gender discrimination. Option B. The Civil Rights Act applies only to commercial real estate. Option C. The Fair Housing Act is a specific component of the broader Civil Rights Act, focusing on housing discrimination. Option D. There is no difference.
The correct answer is option C. The Fair Housing Act is a specific component of the broader Civil Rights Act, focusing on housing discrimination. The 1964 Act was broad legislation addressing voting, schools, and public accommodations, while Title VIII of the 1968 Act specifically targeted housing.
Question 10. What is the Bancroft Bonding Act associated with? Option A. Real estate broker surety bonds. Option B. Infrastructure financing, such as water and local improvement projects. Option C. Property management security deposits. Option D. Mortgage lending regulations.
The correct answer is option B. Infrastructure financing, such as water and local improvement projects. The Bancroft Bonding Act allows property owners to pay for local civic improvements, like sewers and sidewalks, in installments rather than a single lump sum.
Question 11. Before selling a lot via a land sale contract in a subdivision, what must be in place? Option A. A comparative market analysis. Option B. An escrow arrangement must be established in Oregon with a licensed escrow agent. Option C. A completed home inspection. Option D. A guarantee of property appreciation.
The correct answer is option B. An escrow arrangement must be established in Oregon with a licensed escrow agent. Oregon subdivision laws require consumer protections, including an escrow collection arrangement, when selling lots under a land sale contract.
Question 12. How is a property's assessed value determined for taxation purposes in Oregon? Option A. It is based solely on the current market value. Option B. It is the purchase price of the home. Option C. It is the lesser of the real market value or the maximum assessed value. Option D. It is determined by the neighbor's property values.
The correct answer is option C. It is the lesser of the real market value or the maximum assessed value. Measure 50 in Oregon limits property tax growth by dictating that taxes are based on the lesser of the real market value or the maximum assessed value, which can only grow 3% per year.
Question 13. What distinguishes a broker price opinion, BPO, from a comparative market analysis, CMA? Option A. A CMA is performed by an appraiser. Option B. A BPO is typically more structured and detailed than a CMA. Option C. A BPO is free, while a CMA always costs money. Option D. A CMA is only used for commercial properties.
The correct answer is option B. A BPO is typically more structured and detailed than a CMA. While both estimate value, a BPO is often requested by lenders for short sales or foreclosures and follows a more structured, detailed format than a standard CMA used for listing presentations.